and welcome to bizpoints. Today, we will be analyzing JPMorgan Chase. JPMorgan Chase, the largest bank in the United States by assets, demonstrates strong positive momentum in its overall performance. The company's robust financial results, strategic initiatives, and market leadership position it favorably in the competitive landscape of global financial services. Several key factors support this positive momentum assessment. First and foremost, JPMorgan Chase consistently delivers strong financial performance across diverse business segments. Additionally, the bank has successfully implemented digital transformation and technological innovation initiatives, positioning it well for the future of banking. In response to the changing market dynamics, JPMorgan Chase has proactively addressed fintech competition, ensuring it remains at the forefront of financial services innovation. Furthermore, the bank has shown a strong commitment to sustainability and corporate social responsibility, aligning its business practices with growing environmental and social concerns. This commitment is complemented by effective risk management and crisis preparedness strategies, which are crucial in the volatile financial sector. JPMorgan Chase's strong market position and brand recognition in global banking contribute significantly to its positive momentum. Despite these strengths, the bank faces several challenges that require ongoing attention and strategic responses. These include cybersecurity threats, regulatory pressures, and economic uncertainties, all of which have the potential to impact the bank's performance and reputation. Turning our attention to JPMorgan Chase's recent financial results, we can see that they underscore its strong market position and ability to generate substantial profits, even in challenging economic environments. The bank's third quarter 2024 financial highlights paint a picture of robust performance and growth. In this quarter, JPMorgan Chase reported a net income of $12.9 billion, translating to $4.37 per share. The bank's net revenue reached $43.3 billion, marking a 6% increase compared to the same period in the previous year. This growth was driven by both net interest income and non-interest revenue. Net interest income rose to $23.5 billion, a 3% year-over-year increase, while non-interest revenue saw a more substantial 11% jump, reaching $19.8 billion. The bank's profitability metrics also remain strong, with a return on common equity of 16% and a return on tangible common equity, ROTCE, of 19%. These figures indicate efficient use of shareholder capital. Additionally, JPMorgan Chase maintained a robust capital position, with a Common Equity Tier 1 capital ratio of 15.3%, well above regulatory requirements. The 6% increase in net revenue demonstrates JPMorgan Chase's ability to grow its business even in a challenging economic environment. Particularly noteworthy is the 11% increase in non-interest revenue, suggesting successful fee-based services and trading activities. Delving deeper into JPMorgan Chase's performance across its key business segments provides valuable insights into its strengths and challenges. In the consumer and community banking segment, the bank reported a net income of $4.0 billion, representing a 31% decrease compared to the previous year. This significant decline is concerning and may indicate challenges in the retail banking sector, possibly due to increased competition from fintech companies or economic pressures on consumers. On a more positive note, the commercial and investment bank segment showed strong growth, with net income reaching $5.7 billion, a 13% increase. This robust performance underscores JPMorgan Chase's strength in corporate finance and investment banking activities. The growth in this segment has helped to offset declines in other areas, showcasing the advantages of the bank's diversified business model. The asset and wealth management segment reported a net income of $1.4 billion, a slight 5% decrease. While showing a decline, this segment continues to contribute significantly to the bank's overall performance. The decrease may reflect market volatility or increased competition in the wealth management space. Comparing JPMorgan Chase's performance to its main competitors further highlights its strong position in the industry. In the third quarter of 2024, JPMorgan Chase's net income of $12.9 billion significantly outpaced its closest rivals. Bank of America reported $7.8 billion, Citigroup $3.5 billion, and Wells Fargo $5.1 billion. JPMorgan Chase also led in terms of return on equity, with 16% compared to Bank of America's 11.8%, Citigroup's 7.5%, and Wells Fargo's 11.2%. Furthermore, JPMorgan Chase maintained the strongest capital position among its peers, with a CET1 ratio of 15.3% compared to Bank of America's 11.9%, Citigroup's 13.5%, and Wells Fargo's 10.8%. These figures underscore JPMorgan Chase's market leadership among traditional banks. The bank's superior performance reflects its ability to generate profits across various business lines and maintain a strong balance sheet, even in challenging economic conditions. Moving on to shareholder value and capital management, JPMorgan Chase's commitment is evident in its dividend and stock repurchase programs. In the third quarter of 2024, the bank paid out common dividends of $3.6 billion, or $1.25 per share, representing a 19% increase compared to the previous year. Additionally, the bank conducted common stock net repurchases amounting to $6.0 billion. The substantial increase in dividends and significant stock buybacks reflect JPMorgan Chase's strong financial position and confidence in its future performance. This approach to capital management demonstrates a balance between reinvesting in the business and returning value to shareholders, further reinforcing the bank's positive momentum. Shifting our focus to strategic initiatives and market positioning, we can see that JPMorgan Chase has placed a strong emphasis on digital transformation and innovation in response to the rapidly evolving financial services landscape. The bank has invested heavily in technology to enhance customer experience, improve operational efficiency, and maintain its competitive edge. One key aspect of JPMorgan Chase's digital transformation is its focus on cloud computing. The bank has set an ambitious goal of having 70% of its applications and 75% of its data in public or private clouds by the end of 2024. As of the latest report, 38% of the bank's infrastructure is cloud-based, representing an 8 percentage point increase year over year. This migration is expected to improve scalability, reduce costs, and enhance the bank's ability to deploy new services rapidly. Artificial intelligence, AI, and machine learning, ML, are also central to JPMorgan Chase's technological initiatives. The bank expects to deliver more than $1.5 billion in business value from its AI and ML efforts in 2023. With over 300 AI use cases in production, JPMorgan Chase is leveraging these technologies for various applications, including fraud detection, risk management, personalized customer experiences, and process automation. In the realm of blockchain and cryptocurrency, JPMorgan Chase has made significant strides. The bank launched JPM Coin for settling transactions between wholesale payments clients and is experimenting with blockchain for collateral settlements. These initiatives position the bank to capitalize on the growing importance of digital assets and distributed ledger technology in finance. Application modernization is another crucial aspect of JPMorgan Chase's digital transformation. Since 2017, the bank has decommissioned over 2,500 legacy applications and is focusing on cloud-native application development. This modernization effort aims to reduce technical debt, improve system reliability, and enhance the bank's ability to innovate. Turning to JPMorgan Chase's market positioning, we can see that the bank maintains a strong position across various business segments, cementing its status as a leader in the global financial services industry. In global investment banking, the bank held a 9.1% market share in revenue for 2023, outpacing competitors such as Goldman Sachs, 7.5%, and Bank of America, 6.8%. This leadership position provides significant advantages in terms of client relationships, deal flow, and the ability to attract top talent. In the retail banking sector, JPMorgan Chase captured an 11.2% market share in the United States in 2023, slightly ahead of Bank of America, 10.8%, and top Wells Fargo, 7.5%. This strong position in retail banking is crucial for maintaining a stable deposit base and creating cross-selling opportunities for other financial products. The bank's asset management business is also formidable, with $3.9 trillion in assets under management as of the third quarter of 2024. While this figure places JPMorgan Chase behind industry giants like BlackRock, $9.1 trillion, and slightly behind Morgan Stanley, $4.2 trillion. The bank's diverse product offerings and strong brand recognition continue to attract significant client assets. In the realm of digital banking, JPMorgan Chase has established itself as a leader with 62 million digital banking users in the United States as of 2023. This places the bank ahead of competitors like Bank of America, 55 million users, and Wells Fargo, 33 million users, underscoring JPMorgan Chase's successful digital transformation efforts. The bank also holds a dominant position in the credit card market, with a top 23% market share in U.S. credit card purchase volume in 2023. This puts JPMorgan Chase ahead of competitors like American Express, 19%, and Bank of America, 14%. The strong position in the credit card market provides a significant source of fee income and valuable consumer spending data. As we consider JPMorgan Chase's competitive landscape, it's important to note the bank's response to the rise of all fintech companies. The bank has adopted a multifaceted approach to maintain its competitive edge in this evolving environment. First, JPMorgan Chase has invested heavily in its own digital capabilities, including the Chase mobile app, which has consistently received high ratings for user experience. This focus on digital innovation aims to meet evolving customer expectations and compete directly with fintech offerings. Second, the bank has formed strategic partnerships with fintech companies to enhance its offerings. For example, JPMorgan Chase partnered with OnDeck Capital to improve its small business lending capabilities, combining the bank's resources with OnDeck's innovative lending platform. Third, JPMorgan Chase has made strategic acquisitions to bolster its technological capabilities. The acquisition of WePay, for instance, enhanced the bank's payment processing services, allowing it to better compete in the digital payment space. Fourth, the bank has launched digital-first products to compete directly with neobanks and meet changing customer preferences. The introduction of Chase Digital Banking exemplifies this strategy, offering a streamlined digital banking experience that rivals those of fintech challengers. Finally, JPMorgan Chase has been actively involved in blockchain initiatives, as evidenced by the development of JPM Coin and participation in blockchain consortiums like Finality International. These efforts demonstrate the bank's commitment to staying ahead in distributed ledger technology and maintaining its relevance in the evolving financial landscape. While JPMorgan Chase has shown strength in many areas, it's crucial to examine the bank's approach to risk management and operational challenges. The bank has developed a robust risk management approach to address various potential threats to its operations and reputation. This comprehensive framework includes several key components designed to ensure the bank's stability and resilience in the face of diverse challenges. One crucial element is the Business Continuity Plan, BCP, which outlines a set of actions and processes to maintain stability during operational interruptions. The BCP covers a wide variety of unexpected occurrences, including natural disasters, cyber attacks, and pandemics, ensuring that the bank can continue its critical operations even in extreme circumstances. Complementing the BCP is JPMorgan Chase's Crisis Management Framework. This framework enables the bank to account for various contingencies in its resolution plan and includes a crisis communication plan linked to stress scenarios. By preparing for potential crises in advance, the bank aims to minimize disruptions and maintain stakeholder confidence during challenging times. JPMorgan Chase also maintains a detailed resolution plan to ensure orderly resolution without government assistance or taxpayer support in the unlikely event of severe financial distress. This plan includes strategies for maintaining critical operations and services during a crisis, further demonstrating the bank's commitment to responsible risk management. Financial preparedness is another cornerstone of JPMorgan Chase's risk management approach. The bank maintains robust capital resources totaling $381 billion in total loss-absorbing resources. Additionally, it holds significant liquidity resources, including $524 billion in high-quality liquid assets. These financial buffers provide a strong foundation for weathering potential economic storms and maintaining the bank's stability. To ensure the effectiveness of its risk management practices, JPMorgan Chase conducts regular testing of its crisis management plans and maintains and updates a recovery plan. This ongoing process of evaluation and refinement helps the bank stay prepared for evolving risks and challenges in the financial landscape. Despite these robust risk management practices, JPMorgan Chase faces several operational challenges that require ongoing attention and strategic responses. Cybersecurity threats represent a significant and growing concern for the bank. The increasing sophistication and frequency of cyber attacks targeting financial data pose risks to customer data and banking infrastructure integrity. To address this challenge, JPMorgan Chase must continuously invest in cybersecurity measures and employee training to stay ahead of evolving threats. Regulatory and compliance risks also present ongoing challenges for the bank. The financial services industry is subject to constant regulatory changes that can impact operations and profitability. JPMorgan Chase faces substantial compliance costs related to anti-money laundering (AML) and combating the financing of terrorism (CFT) regulations. A recent fine of $348.2 million imposed by U.S. banking regulators in March 2024 for deficiencies in monitoring trading activities underscores the importance of maintaining robust compliance systems. Technological disruptions pose another set of challenges for JPMorgan Chase. As the bank continues its digital transformation journey, it faces difficulties in adopting and integrating new technologies with legacy systems. There are also risks associated with potential system failures during this transformation process, which could impact customer service and operational efficiency. Economic risks remain a persistent concern for JPMorgan Chase. Potential economic downturns could affect loan repayment and default rates, while interest rate volatility can impact the bank's margins. Navigating these economic uncertainties requires careful risk management and strategic planning. Talent acquisition and retention present another challenge, particularly as JPMorgan Chase competes with tech companies and fintech startups for top talent in areas like AI and data science. The bank must find ways to foster an innovation culture within its traditional banking framework to attract and retain the skilled professionals needed to drive its technological initiatives. Finally, pressures in the consumer banking sector as evidenced by the decline in consumer and community banking income, highlight challenges in the retail banking sector. Increased competition from fintech companies and changing consumer preferences require JPMorgan Chase to continuously innovate and adapt its retail banking offerings to maintain its market position. Shifting our focus to sustainability and corporate social responsibility, we can see that JPMorgan Chase has made significant commitments in these areas, recognizing the importance of environmental, social, and governance (ESG) factors in long-term business success. These initiatives not only contribute to societal goals, but also position the bank to capitalize on growing demand for sustainable and socially responsible financial products. A key pillar of JPMorgan Chase's sustainability efforts is its $2.5 trillion sustainable development target. The bank aims to finance and facilitate more than $2.5 trillion over 10 years by 2030 to address climate change and contribute to sustainable development. This ambitious target demonstrates JPMorgan Chase's commitment to playing a leading role in financing the transition to a low-carbon economy. The bank has already made significant progress in its environmental initiatives. In 2023, JPMorgan Chase achieved a 15% reduction in Scope 1 and Scope 2 greenhouse gas emissions compared to 2019 levels. Looking ahead, the bank has set a goal of achieving carbon neutrality in its operations by 2030. These efforts align with growing global concerns about climate change and position JPMorgan Chase as a leader in sustainable finance. To support its sustainability goals, JPMorgan Chase has been actively involved in green financing initiatives. The bank has facilitated over $200 billion towards green financing, including renewable energy projects and green bonds. This not only contributes to environmental protection, but also opens up new business opportunities in the rapidly growing sustainable finance sector. In October 2021, JPMorgan Chase joined the Net Zero Banking Alliance, committing to aligning its lending and investment portfolios with net zero emissions by 2050. This commitment further underscores the bank's dedication to supporting the global transition to a low-carbon economy. On the social responsibility front, JPMorgan Chase launched a $30 billion racial equity commitment in October 2020. This 5-year initiative aims to help close the racial wealth gap among Black, Hispanic, and Latino communities. The commitment includes expanding affordable housing, growing Black and Latino-owned businesses, and improving financial health and access to banking in underserved communities. The bank has also been active in community development, investing over $500 million in programs focused on affordable housing and small business support in underserved communities. These efforts not only contribute to social equity, but also help JPMorgan Chase build stronger relationships in diverse communities. In terms of workforce diversity, JPMorgan Chase has made significant strides. The bank has achieved 50% gender diversity globally and 45% ethnic diversity within its U.S. operations. These figures reflect the bank's commitment to creating an inclusive workplace and leveraging diverse perspectives to drive innovation and better serve its diverse customer base. To ensure transparency and accountability in its ESG efforts, JPMorgan Chase publishes an annual ESG report, consolidating and summarizing its work on ESG topics. The bank also conducted over 10,000 ESG risk assessments in 2023, integrating environmental and social risks into its comprehensive risk management framework. This approach demonstrates JPMorgan Chase's commitment to managing ESG risks alongside traditional financial risks. Looking towards the future, JPMorgan Chase's outlook appears positive, supported by several key factors. The bank's projected financial performance for 2024 includes a net interest income (NII) excluding markets of approximately $91.5 billion, adjusted expenses of about $91.5 billion, and a card net charge-off rate of approximately 3.4%. These projections suggest continued strong financial performance in the coming year. The bank's ongoing investments in technology and digital capabilities position it well to meet evolving customer expectations and compete effectively with fintech challengers. This digital transformation is likely to be a key driver of future growth and operational efficiency. JPMorgan Chase's commitment to sustainable finance and social responsibility aligns with growing investor and consumer preferences, potentially opening new business opportunities. As the demand for ESG-focused financial products continues to grow, the bank's leadership in this area could provide a competitive advantage. The bank's strong capital position, evidenced by its robust Common Equity Tier 1 CET1 ratio of 15.3%, provides a solid foundation for weathering economic uncertainties and pursuing growth opportunities. This financial strength gives JPMorgan Chase the flexibility to invest in new initiatives and respond to market changes. Furthermore, the bank's diverse business model, with its presence across various financial sectors, provides stability and multiple revenue streams. This diversification helps to offset potential weaknesses in specific areas and contributes to the bank's overall resilience. However, JPMorgan Chase still faces several challenges that could impact its future performance. These include ongoing economic uncertainty, regulatory scrutiny, technological disruption, and geopolitical risks. The bank will need to navigate these challenges carefully to maintain its positive momentum. To address these challenges and capitalize on its strengths, JPMorgan Chase should consider several strategic recommendations. First, the bank should accelerate its digital transformation efforts. This involves continuing to invest heavily in digital capabilities, focusing on seamless integration of new technologies with existing systems, and prioritizing improvements in customer experience and operational efficiency. By staying at the forefront of technological innovation, JPMorgan Chase can maintain its competitive edge against both traditional banks and fintech challengers. Second, enhancing cybersecurity measures should remain a top priority. The bank should continue to invest in state-of-the-art cybersecurity infrastructure and practices, implement advanced threat detection and prevention systems, and conduct regular employee training on cybersecurity best practices. Given the increasing frequency and sophistication of cyber threats, robust cybersecurity is crucial for maintaining customer trust and protecting the bank's assets. Third, JPMorgan Chase should expand its sustainable finance initiatives. This could involve developing innovative financial products and services aligned with environmental and social goals, enhancing ESG risk assessment capabilities, and leveraging sustainability initiatives to attract environmentally conscious customers and investors. As sustainability becomes increasingly important to consumers and investors, leadership in this area could provide a significant competitive advantage. Fourth, the bank should focus on strengthening its consumer banking segment. This involves addressing the challenges in the consumer and community banking segment by enhancing digital offerings, improving customer experience, and developing targeted strategies to compete with fintech challengers. Given the importance of retail banking to JPMorgan Chase's overall business, revitalizing this segment is crucial for maintaining balanced growth. Fifth, fostering an innovation culture within the organization should be a key focus. This could involve implementing programs to attract and retain top talent, particularly in areas like artificial intelligence, data science, and blockchain. Encouraging entrepreneurship and innovation within the organization, possibly through establishing innovation labs or accelerators, could help generate new ideas and keep the bank at the cutting edge of financial services innovation. Sixth, JPMorgan Chase should continue to optimize its risk management practices. This includes refining risk assessment and management practices, enhancing predictive analytics capabilities for risk forecasting, and developing robust strategies for emerging risks, such as climate-related financial risks. Given the evolving nature of risks in the financial sector, staying ahead in risk management is crucial for long-term stability and growth. Finally, the bank should enhance its regulatory compliance efforts. This involves investing in advanced compliance technologies, strengthening internal controls and monitoring systems, and proactively engaging with regulators to stay ahead of evolving requirements. Given the complex regulatory environment in which JPMorgan Chase operates, excellence in compliance is essential for avoiding costly penalties and maintaining the bank's reputation. By focusing on these areas, JPMorgan Chase can build on its current strengths, address emerging challenges, and maintain its position as a leader in the global financial services industry. The bank's ability to balance innovation with stability and top growth with risk management will be crucial in shaping its future success and impact on the global economy. JPMorgan Chase continues to demonstrate strong positive momentum in its overall performance, maintaining its position as a global leader in the financial services industry. This assessment is supported by a comprehensive analysis of the bank's financial results, strategic initiatives, market positioning, and future outlook. The bank's consistently strong financial performance across diverse business segments forms the foundation of its positive momentum. JPMorgan Chase's ability to generate substantial profits, even in challenging economic environments, is evidenced by its robust third quarter 2024 results. With a net income of $12.9 billion and a 6% year-over-year increase in net revenue, the bank has shown remarkable resilience and adaptability. JPMorgan Chase's successful implementation of digital transformation and technological innovation initiatives has positioned it well for the future of banking. The bank's investments in cloud computing, artificial intelligence, and blockchain technology demonstrate its commitment to staying at the forefront of financial innovation. This focus on technology not only enhances operational efficiency, but also improves customer experience, a crucial factor in maintaining competitiveness in the evolving financial services landscape. In response to the changing market dynamics, JPMorgan Chase has proactively addressed fintech competition. Through a combination of in-house innovation, strategic partnerships, and acquisitions, the bank has maintained its relevance in an increasingly digital financial world. The launch of digital-first products and the development of blockchain initiatives like JPM Coin showcase the bank's ability to adapt to new market realities. JPMorgan Chase's strong commitment to sustainability and corporate social responsibility aligns its business practices with growing environmental and social concerns. The bank's $2.5 trillion sustainable development target and $30 billion racial equity commitment demonstrate its recognition of the importance of ESG factors in long-term business success. These initiatives not only contribute to societal goals, but also position JPMorgan Chase to capitalize on the growing demand for sustainable and socially responsible financial products. The bank's effective risk management and crisis preparedness strategies are crucial in the volatile financial sector. JPMorgan Chase's comprehensive risk management framework, including its business continuity plan and crisis management framework, provides a solid foundation for navigating economic uncertainties and potential crises. The bank's strong capital position, with a Common Equity Tier 1 (CET1) ratio of 15.3%, further enhances its resilience. JPMorgan Chase's strong market position and brand recognition in global banking contributes significantly to its positive momentum. The bank maintains leading market shares across various business segments, including investment banking, retail banking, and credit card services. This market leadership provides significant advantages in terms of client relationships, deal flow, and the ability to attract top talent. However, JPMorgan Chase faces several challenges that require ongoing attention and strategic responses. These include cybersecurity threats, regulatory pressures, economic uncertainties, and increased competition in the consumer banking sector. The bank's ability to effectively address these challenges while capitalizing on its strengths will be crucial in maintaining its positive momentum. Looking ahead, JPMorgan Chase's future outlook remains positive. Supported by its strong financial position, diverse business model, and strategic initiatives. To maintain and enhance its market leadership, the bank should focus on accelerating digital transformation, enhancing cybersecurity measures, expanding sustainable finance initiatives, strengthening consumer banking, fostering an innovation culture, optimizing risk management, and enhancing regulatory compliance. In conclusion, JPMorgan Chase's strong financial performance, market leadership, and strategic initiatives position it well for continued success in the evolving financial services landscape. By addressing key challenges and focusing on strategic imperatives, the bank can maintain its positive momentum and strengthen its position as a global financial powerhouse. As the financial industry continues to transform, JPMorgan Chase's ability to balance innovation with stability and growth with risk management will be crucial in shaping its future success and impact on the global economy. That concludes our analysis of JPMorgan Chase. Thank you for tuning in to BizPoints. If you found this clip useful, we would appreciate it if you could help by liking, sharing, and subscribing, as well as viewing our other clips on other companies. Thank you.